One of the greatest challenge that you face as a beginner forex trader is the challenge of knowing exactly where you are to buy from and where to sell from. In as much as these zones are not 100% accurate, but there is a high probability from proven history and from experience of my trading that 80 to 90% of these zones are very much effective. I'll be sharing with you these zones that you can make your buy trade from. If you do the opposite, it will be for a sell. So, in this video, we are looking at the various types of buy zones or demand zone. Your buy zone, they are those price level where you are expecting potential opportunity to buy. That is, you are anticipating price to rise in value from this zone. So when you have an adequate understanding of this zone, can help you to make a good trading decision. The question now is, what are these types of zone? Number one we want to look at is breakers block. So here is a typical breakers block. Now the next thing is, how do we identify a breakers block? And that is what I'll be sharing with you. First, take note of this. For you to have a breakers block, it means that price has to be either in a downtrend. For instance, price is in an uptrend, higher high, higher low, higher high, higher low, higher high. Then suddenly you are expecting price to come to this zone here, to this other block, retest it and push to the upside. But unfortunately now price came down here and break this particular other block. So it means that this other block is no longer regarded, we are no longer going to call this an order block. Since price break through it, it is no longer an order block. It is now called a breakers block. So now that it's a breaker block because price break it, what do you expect price to do? It is now expected that price will pull back into this zone and then retest this zone and continue to the downside. So that is the simple understanding of this particular pattern. So one of those zones is your breakers block. And in an uptrend scenario, price will be giving you higher high, higher low. Sorry, in a downtrend scenario, price will be giving you lower low, lower high, lower low, lower high, lower low, lower high, and lower low. So you are expecting this zone to withhold price so that price should step into this zone and then give you a new lower low. But unfortunately, price break this zone. So this zone becomes what? A breakers block. So what are you expecting price? You are now expecting that this breakers block now becomes a demand zone. So you are expecting price to come into it, retest it, and then push up to the upside. So you are not going to leave this breakers block to chance, because if price retest it, look at in this scenario, price retest it and gave us a bullish pin bar pattern, and then you buy. The question is, you are not leaving it to chance. Immediately you get a bullish confirmation candle. Okay, so that is a typical breakers block. Another thing we need to take note of is, it is not always that price will respect this particular breakers block. For instance, if there is a liquidity sitting up there or below it, price will not respect it. At times, if there is a fair value gap, price will go to fill in that fair value gap before it will now push up to the upside. The second one is our demand zone. Now, what is this demand zone? These demand zones are zones of order block. Like in an uptrend, we call it a demand zone because it's a buy zone. While in a downtrend, we call it supply zone because it's a sell zone. Now, in this demand zone, we are looking at this order block. Wait for price to come into this order block, then it get the mitigation, and then we have this bullish pin bar and you see how price buy to the upside. This order block has been discussed in so many of our videos, so you can go and watch it out.
So this is what? This is an order block. So we are calling this smart money cube an order block because it at the same time consists of an order, a buy demand. So which means that there is a demand, and then when you get this pin bar coming to it, you can make advantage and make your trade entry. The advantage of this is because there is already an existing trade. A trend has already been established. It's not like in this case, this is the break of structure and price is pulling back. That is the difference and the advantage of this. So most of this smart money cube happens after price manipulations. And in this case, remember, if this is now a break of structure, this is expected to be what? This is expected to be a breakout block. So you were expecting price to retest this and pull. But remember I said earlier, if there's an order block or there's a fair value gap, price might want to pull in. And obviously you can see that here, there's an imbalance here. So this price failed this zone to pull into this particular order block before buying to the upside. So these are various zones that you can take advantage of. You can see this still continue. This is a demand zone because this is a smart money cube. Here too is another one. But most of these, the reason you won't trade this, some of these zones, is because some of these zones are far from your area of stop loss. You won't be making this trade when you don't have a reasonable place to put your stop loss, and that is why you are not trading some of these zones. You can see here, this is a fair value gap. So your fair value gap are part of those areas that you are expecting price to pull back to in order for you to buy or to sell. You can see this. Look at demand zone. Okay, this is demand zone 1, but then you can see this one, demand zone 2. So this is this and this is this, and then you have this fair value gap. All of these zones are where price will come to. Then you now use your confirmation to make your trade entry. This confirmation can be a break of structure. Like in this case, it can be a candlestick formation. And that is why I've made a video talking about the 2 candles that you need for trade entry. Personally, I use only 2 candles and I'm recommending it. The bullish or the bearish engulfing, and then the pin bar or the hammer, either bullish or bearish. Go ahead, do your work on your chart. If you have any question, you can ask in the comment section, or my Telegram username is in the description of this video. You can reach out directly to ask questions for clarity. And also, if you are interested in the mentorship class, you can also reach out to me directly via this link. So thank you for watching, and we look forward to see you in the subsequent video.